Today, we're speaking with David from Loan Depot, and we're going to be talking more about the pre-approval process.
I'm Randall Dolland, a licensed real estate agent, and I'm here to help you navigate the world of New York City's real estate market.
So when you're out looking for property, of course you're going to need to have a mortgage professional by your side, someone that you're working with to provide you financing for your home. And of course here today I brought David from Loan Depot, who will talk to us more about getting started, the pre-approval process. So David, thanks for being here.
Thanks for having me.
Of course, so let's get started. Tell us more about the pre-qualification. Let's start there.
Right. So the beginning stages of this process are typically a pre-qualification. This is where you'll talk to your accountant, your financial planner, and your mortgage professional, a basic rundown of your assets, your income, and your credit. Based on these three things, we can give you a ballpark figure of what you can afford.
Right, because of course that's just based on a general conversation.
Right.
You have not provided any sort of financial documents or paperwork, and you just give a ballpark of your credit, and of course you just say, well, here's a ballpark of what you can or could afford.
Mm-hmm.
Right.
One step further than that is the actual pre-approval process. So this is where you would give us your documented income and your asset statements, and based on these things, we'll also run your credit. And based on things like your credit history, your credit score, the documented income, we can give you things like rate, available products,
Right.
things of that nature.
And that would, you take that document now, and when we're going to the open houses, and we have that pre-approval letter that states exactly how much you're pre-approved for.
Right.
And how much, so pretty much the seller knows that you're ready to go, that you already spoken with a lender, and you're ready to submit an offer and get the mortgage to close on that property.
Yeah, something really interesting and cool that Loan Depot does is that we take that pre-approval process and we take it one step further. We call it a pre-approval commitment letter. And this is essentially underwriting the client's file from a credit standpoint and giving them a commitment letter before they've even found the property. So now they can go to open houses with this pre-approval commitment in their hand, and effectively making them a cash buyer.
Yeah, that's indeed a great product, because we've had clients that have come in, especially to close on townhouses.
Right.
And it gave them a considerable advantage, because they were more or less looked at as a cash buyer over people who simply had pre-approval letters.
Right.
But of course it's contingent to the appraisal.
It's contingent to the appraisal and the project review.
Project review, especially for condos and co-ops.
Exactly.
Elaborate a little bit more about that.
Yeah, so the approval process with condos and co-ops is a little different, just because we are basically underwriting two sides of this game. We're credit approving the client, stating that they're in good financial standing to be able to finance this property, and we are also underwriting the co-op and the condo, the project itself, to understand that the project is in good financial and structural sound.
Right. Yeah, of course. I mean, that makes a lot of sense, because you have to make sure that the building could pass, and
Right.
make sure there's no issue in the building.
Exactly.
And as an agent, I would go in advance, look up the building, ensure that when we do go in there, we're not met with any sort of surprises.
Yeah.
Oh, by the way, this is happening. So makes it more of a seamless transaction when you are ready to now put an offer in and get the mortgage to actually close.
Right.
Because closing a condo on a co-op is a little bit different.
It's
as
different.
well.
The main difference there is the closing costs.
Right.
With a condo, you have fees that include title insurance and mortgage tax.
Right.
So these two fees are attributed to the fact that the condo is actual property. You're buying the property itself.
Real property, deeded property,
Right.
with actual block and lot number.
Exactly. With a
Yeah.
co-op, it's a little different. You're buying stocks in a corporation. You're buying the right to live in that property.
Proprietary lease, as we will sometimes call it.
Exactly.
Yeah, so thank you, David, for that. You definitely enlightened us, and I hope it enlightened you, the viewer. And if you do need more information, you could always contact us, David from the mortgage side, or myself on the agent side, and we could do that sort of due diligence and get you ready for making an offer and finding you your new home.
Thank you for viewing. Visit my website for more information or subscribe to my YouTube channel.